Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, July 30th, 5:20 p.m. Eastern Time, and you know if it's Friday and I'm doing the video, it's the big show. The expanded edition of the Revere Asset Management Market Insight video where we take a look back at the prior week and take a look ahead at the key levels and the facts that you need to know about for next week. We'll also update the 21 over 21 list, go through some portfolio changes that we made this week, and also see what sectors are leading and what is lagging. A lot of big tech names reported earnings this week, and certainly a mixed bag there. We'll cover it all for you here in the expanded edition. So let's get going. We've got the first look at the state of the market. We're in an uptrend. Small and mid caps continue to lag. However, they did show a little bit of relative strength this week. So let's look over here at the trend gauge. Market leaders still bullish. We did bring out the yellow arrow as several that we've held and that were on close on our watch list broke the 21 this week. So brought out the yellow arrow there, and the yellow arrow on our short term and medium term time frames also pointing yellow. That's because of the weakness in the small and mid caps, as they still can't get above the 21 and 50-day moving averages. Long term, for over a year now, we've been trending above the key 200-day moving average. These three averages are a summary of where the indexes are relative to these three time frames. For the short term, we use the 21-day exponential moving average, medium term 50-day moving average, long term 200-day moving average. So what just happened today and this week? Leaders underperform indexes. 3 of the 5 sessions this week. As I go through my notes, I've got highlighted. Tech leaders lagged on Monday. Tech leaders lagged on Tuesday. Tech leaders lagged on Friday. And on Thursday, tech leaders weak into the close. So actually 4 out of the 5 days, leaders underperforming the indexes. Here's how we closed the week. S&P 500 down 0.5%. Same with the Nasdaq 100. Dow down 0.4. Mid caps barely down. Russell down 0.6. Pretty good effort by the Nasdaq 100, considering that Amazon, a big component, was down 7.5% on a disappointing earnings report. So all last night and overnight and going into today, in fact, we opened with the S&P, with the Nasdaq 100 down 1%, and we cut that in half by the close. Semiconductors had a good day, up 0.8%. They really have been picking up the slack for some of the lackluster earnings that showed up in some of the big cap tech this week. So let's get to the charts. First of all, let's get a look at the smiling faces of Revere. Happy to see Meryl, our office manager, added to our website bios, and we're in the process of redesigning our website. It's going to look absolutely nothing like it looks now. Not sure what the time frame is exactly on that, but if you've got an interest in doing what we think is a better approach to just letting the markets control your money. If you want to go with a technical opinion, a trend following system that follows the indexes, follows the market higher, and protects your capital as it turns lower, we're an active manager and we'd love to discuss what we do. Give us a shout. You call our toll-free number, that's 855-REAL-WEALTH, 855-732-5932. Either Dan or Meryl is going to answer that. And if you want to talk strategy at all, you can get with either Tim, Hunter, Alex, or myself. All of our emails are at Revere Asset with our first names in front of them. So that's Dan, Tim, Hunter, Meryl, Alex, and Don at revereasset.com, or as I said, call 855-732-5932. Let's take a look at some secondary indicators very quickly. Start with the fear and greed index, and still teetering between extreme fear, and this is actually bullish. The worst off this is, it's really like you're going the wrong way on the football field with the ball. It's this is historically shown to be a contrary indicator. So when you see fear, it's when you see extreme greed when we're at the highs that there are issues with this. This isn't a pure sentiment indicator. However, if you scroll down, there are some technical type indicators that go into this. Again, um, not pure sentiment, but it is a good thing to see some fear in there. So next up, let's take a look at how the put call ratio closed the week. If I can get the tab to come up, let's check the NASI McClellan Summation Index, and this is also something that can be used to gauge the direction of the market. And considering the market is near all-time highs and you've got the McClellan Summation Index negative, that really means that the smaller names are lagging, and you do see a little hookup here on Thursday. Not sure when it updates for Friday what we'll see, but the put call ratio a little bit on the high side to close the week in 0.8. That's actually also a contrarian good sign for the bulls. So let's get to the charts now, and we'll start off with the S&P 500, and you can see what are the keys for this week. So step back to last week. We had a big shakeout on Tuesday, held the 50-day moving average, really strong action 4 days to close the week, and really we just consolidated and digested that move sideways. S&P down slightly for the week, but sitting right on the 8 EMA. Nothing wrong with that at all. Let's go to the Nasdaq 100. Nasdaq 100, big shakeout on Tuesday, but we did hold the 21 on that. 2 inside days on Wednesday and Thursday, and then the gap down on Amazon on Friday, but closed near the highs of its range just below the 8 EMA. This was the weakest index on the week, down about 1%. But we have closed the gap to 4.4% above the 50-day moving average. All the way back here on 7/2 is when we first turned the red light on, meaning we're extended over 6% on the 50-day, and typically this means that you're not really going to get a lot of upside. And what we saw is a little bit of move up, 3-day harsh pullback, but held the 21. And then another pretty good rally there. This was Monday, the big shakeout rally to close the week, a shakeout on Tuesday, and really we just closed about 1% or 2% above where we first started, putting that red light on and off depending on where we were relative to the 50-day moving average. Let's go to the Dow Jones Industrial Average, which really hasn't been doing a whole heck of a lot, lagging on a relative basis, but just really consolidating after this big 2-day shakeout last week. Nice rebound to close the week. Nice tight action this week, sitting right on the 8 EMA, just down fractionally for the week. Mid caps were actually the leading index for the week, and you can see here they got back above to close the week, above the 21 and the 50-day moving average. So really just the small caps that are lagging now, and you can see the relative strength to end the week here. I alluded to that a little bit about how this is where we saw some outperformance this week. We're going to be digging through this weekend of the charts to see what was behind that. We are aware that when we take a look at the XLB chart, that was the basic materials, that was the strongest spider sector for the week. And we took we bought at least one material stock, and we saw another one on the 21 over 21 list have a really good week. So I know we'll be talking about that a little bit, and Hunter kicked that off with his video on Tuesday as we saw that initial strength come in. And then finally, small caps, still below the 21, note the 21 under the 50-day, and can't get above the 50-day either. So really it's the small caps lagging more than mid caps are. But this is just a really long 96 day, so that's 21 week little less than a 20-week base that small caps are forming here. And if we can break out of here, we could really have a decent close to the year. On the other hand, we are in the summer doldrums, a typically weak period, August especially, but we take it day by day. We just don't make decisions based on what day of the year it is. So let's shrink this back down now, and let's look really quickly at the 11 major indexes, starting with XLB. You can see the relative strength here that they had all week, getting back above the 21 and the 50-day moving average. So we're looking at two things when you look here. First, focus in, and I can blow this up still. So we're going to focus in on two things. One, how did the index itself look? And then how, on a relative strength basis, did that actually perform? And this is versus the S&P 500. So start out with XLB. Next up, we're going to go in alphabetical order here, is energy. Energy kind of up and down for the week, can't get back above its 21. XLC, again, a jagged week here. Bad close to the week, but it was extended, probably the most extended of all of the indexes after a big Friday last week. So really just some consolidation, not any damage done, still above the 21 and the 50 on the communication services. How about financials? XLF, mild outperformance this week on a relative basis, still can't get above the 50-day moving average. Industrials, XLI, mixed bag this week, just really going sideways after, and this is really what the Dow looked like too, this big 2-day shakeout, reclaimed it in 2 days, and now sideways over the last 7 days. XLK Tech, also a mixed week. Remember, Amazon isn't in tech, so it's in XLY. That's why in a moment you're going to see why XLY underperformed. So just some consolidation on the tech sector this week. Consumer staples, weakness early in the week. Actually, strength on Monday, weakness middle of the week, strength to close the week. So some inconsistency there, but really just at the top of this flat base that it's forming. Real estate, very similar to what staples did. Strong early, digestion, strong to close the week, near all-time highs, nothing wrong with that. XLU started out the day strong but faded by the end of the day. So this one was strong at the beginning of the week and faded to close the week. Healthcare, XLV, definite relative strength here at all-time highs. So price strength and relative strength. And finally, XLY. This is dominated by Amazon, so that's why you can see the big sell-off there on a relative basis. Now look relatively where we are versus price here. This using this day here back on 7/19, where we were on relative strength, we're below that, although price is high above it. That's why the combination of relative strength and price action we feel is so important. So let's get to the 21 over 21 list now. First of all, let's take a look at the stocks that got booted off. Roku, which we owned and got stopped out of under the 21, punted from the list, as well as something else that we wrapped up, a nice trade in CrowdStrike, booking our 20%. Unfortunately, we had that 20% 3 weeks ago also, and on a relative basis, this stock has gone nowhere for the last 4 weeks. So the big run was really off the 21 here, got right to the top of its range, this flat base, and then just really consolidating sideways, not doing anything wrong, but not outperforming either. And we're looking for the best of the best. So maybe it'll, and also on light volume this week, it pulled back too, but it's been outperformed by Zscaler. And if this was a 22 over 21 list, you would see Zscaler on that list. So we're monitoring CrowdStrike versus Zscaler. We do want to be exposed to the cybersecurity sector. Which one we're in will dictate which one's better, will dictate which one we're in. And then we've also got FTNT. And what do you see that chart momentarily? And then also we got stopped out of PayPal. Took some off before earnings. overnight with the gap down. This is following through to the downside. This is worst case scenario for a stock if you own it, to not have everybody shaken out the first day after the big gap down. And in addition, you got the sell signal of breaking the 50-day moving average on volume. Long term, I'm sure PayPal is going to be fine. How long and how deep this base will go, only time will tell that. But we don't hold things here for sentimental reasons. We're looking to outperform. So those are the three that got punted. Let's take a look at the full list here. We've got 10 sectors, 17 different industry groups. Let's sort them numerically here, and you can inverse numerically, so you can start off with the ones that have been added most recently. And let's get started with that now. And as a reminder, anything that's flagged on here is something that we own in-house. AMD. This has taken the baton from NVIDIA as far as the leading semiconductor stock, and it took a little while for it to get started. On the 27th, it reported earnings, didn't really do a whole lot. The next day, boom, shot out of this base. Maybe a pullback after the big volume, no. Following through with higher highs each of the next 2 days. So this is looking a lot like NVIDIA is when it decided to start making its strong move back here, which you just want to wait for now. I know it's out of its base, but any pullback to either the 5 or the 8 EMA will give you a low risk entry here, but you got to manage it on a smaller time frame then. But AMD definitely a new big leader this week with those 3 days of huge volume and massive relative strength. Also added this week, Lending Club, and this is something we bought on this huge volume gap up. You don't see this very often. When you do, you got to pay attention to it. 1,659% above average volume, and the stock was up 48% in 1 day. This means, well, first of all, they had the most profitable quarter ever, and also Wall Street was off sides. This is a kind of a nicely formed cup and handle. The handle may be a little bit deep, but when you break out of it with this, you have to take note of this stock. And we've just dipped our toe in the water with this, about a 1.5% size right now, and haven't made much progress on it, but we're waiting for the smaller moving averages to catch up to it. And this is something that we want to build a position in as long as it continues to act right. It looks a lot like Upstart did, and they are actually in the same sector. Upstart here also had 1,120%, up 89% in 1 day on 1,121% volume, and then continued to run after that before consolidating and really went on 2 major runs with some harsh corrections in here. Remember, this was the area where leading tech stocks were correcting hard. Very volatile here. Nice run here. Flattening out now. This is really forming the bottom of what may eventually be a very nice base. For now, we're just riding the 21 below the 50-day moving average. But as far as these are similar moves on their first move out of this base on huge volume. So that's Lending Club. Another one we added this week, Franco-Nevada. Gold stocks still do not look good. Let's take a look at the GDX index. Under the 50, under the 200, rounded up through the 21 finally after it had been resistance for a while. The day after the Fed announcement, these stocks gapped up in unison. Now, will they hold? I don't know. They've been disappointing us for a while. They disappointed back here. But if they get going, we like to track these groups that are toward the bottom quartile or quintile of the overall 197 industry groups that IBD tracks. When they start moving up, you want to latch on early to whichever stock has the best chart in the group, and Franco-Nevada hands down has the best chart of anything in the group. You can see this nicely formed, almost a year long, 51-week cup and handle, breaking out of it Thursday and Friday of this week. Tight action here over the last couple of weeks while the sector pulled back, and we bought this yesterday and added to it today. And if we're going to see rotation into material stocks, this one's one of the first ones out of the gate. Snapchat, another one that had a big gap up on earnings, just consolidating that above the 80 MA. We do own that. Dynatrace, initially negative reaction to earnings, but bounced off to 21 and now made higher highs. So we trimmed some of this into earnings because we didn't have a huge gain in it, but added it back. So we've got a full position now as it is toward all-time highs. Numbers not that great from a sales standpoint, but the reaction is exactly what we wanted to see. I'm sorry, from an earnings standpoint, sales a little bit better, up 35%. Next up, Visa. Just consolidating nicely above the 21 since its earnings report. Costco, what an easy hold this would be if you took a position in this right out of its base. This base here, 139 days long, and it's just been riding the 80 MA higher. This is just a thing of beauty, such an easy hold and at all-time highs. We don't own it in-house, but if you use the 2121 list as your screening criteria, which we do, and you bought it, you've had an easy hold. So chemical material stock, ALB, this has been on the 21/21 list and had a really great week this week, accelerating its move out and approaching the pivot plus 20 area. They do have earnings next week. CVNA, Carvana, bounced off the 21 last week and just continuing to ride the 80 MA higher. Apple held the 21 after its initial massive beat on earnings, but sold off. But here's what you like to see. The gap down day on earnings put in the bottom, and it hasn't broken that since, and it's riding the 21. So this is acting just fine. CMG, now this is one that unfortunately we sold before earnings because we had a very small loss, no cushion. But look what it did on this gap up, 355% volume. Should have gotten right back into it. I didn't, but I've watched it take off like every day since then. So sometimes you're just left standing on the beach when the boat takes off. Lulu, this has been acting very good for us. Bounced off the 21 a couple weeks ago, just trending higher, riding the 80 MA, looking very good, superior relative strength. Avantor reported earnings, nice numbers, just continues to ride the 21-day higher. InMode, another one that we had a low single-digit gain on, so took it down to 0.5% for risk control into earnings. Bounced off the 21, bought the other half back, acting very well since its earnings report. RVLV, I noted that this had been kind of jagged, and if they were ranked 1 through 21, this would be ranked 21st, but an undercut and a reclaim of the 21 this week, and it's tightened up quite a bit trying to repair its base, but it does have earnings next week. Viva Systems, nothing wrong here, continuing to trend higher above the 21. Net, definitely one of the leaders of this since it broke out here. It hit its pivot plus 20 to 25%. Let's see what happens now. Still above the 8 EMA earnings next week. DocuSign resting for pretty much all of this week on very light volume after bouncing off the 21. And this is another one that, similar to CrowdStrike and Zscaler, had a big run up to complete the final stage of its flat base. And then when it got there, paused for a little while, broke out above it, and now just above the pivot area going sideways. American Tower continues to just grind higher above the 21. Domino's Pizza, 4% earnings growth, but a 14.5% move. Yeah, I didn't have that. And then just consolidating this move, building a very nice flag into the 80 MA. And finally, what a shakeout on FTNT. This is a lesson where if you don't properly put your stops, you can get shaken out. If you break this down to a 1-minute chart, and I know it won't show because of screen space, you'll see a 1-minute gap down right to about right below this area right here and the 250 area, and then it immediately snapped back above the 21 and closed near the high of the day. So FTNT may not be done with its run that has been near picture perfect. And you know that since it's ranked number 1, it's been on the list for quite a long period of time. As far as changes to the portfolio this week, we did some ads on to Snapchat. I talked about the buys and sells on InMode and DT, in and out of earnings. We got stopped on PayPal on the gap down. Added Franco Nevada, already showed that, and Learning Club. Got stopped on Crowd. I talked about that already, and stopped on Roku as it closed below the 21. And that is going to wrap it. So as always, we'd love to hear from you. I'm on Twitter at Vandenbord. Email don@revereasset.com. Phone 855-REAL-WEALTH. So to summarize what we're looking for next week, really after a shakeout at the beginning of last week and a strong move to close the prior week, we just went sideways this week, consolidating that bounce off the 50-day moving average. Any pullback should be contained by the 21. We're less than 1% above that, 2.6% above the 50-day moving average. That's the S&P 500. On the Nasdaq 100. Just 4.4% extended from the 50-day moving average, now in the same situation after the shakeout early in the week. Strong close to the week. We just went sideways, and the shakeout was on Tuesday morning, and we didn't even break the low of that on Friday with the supposed big gap down on Amazon. So we survived it, I'd say, pretty well. A little bit of relative strength. You'll see IWO, a little bit of relative strength on small cap growth in the middle of the week as it's fighting to get back above this 50-day moving average. Let's look at small cap value, IWN. A little bit of relative strength also, but we want to get these back above their 21 and their 50-day moving averages and get the 21-day average above the 50-day. That's going to wrap it. I already gave you the how to reach me, so yep, wrapping up the month and the week ending 7:30. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.